Hello, everyone. Joshua Hayes at BigWaveTrading.com. I hope you are all having a lovely weekend. It's another hot one on Maui. Speaking of hot one, the market this past week, the last 3 sessions, pretty hot overall. That being said, we have a lot of conflicting mixed messages. I, of course, no surprise, did not get my SPY 390 or lower close. That would have allowed me to immediately put at least 25% of my funds in the long-term account to work. If you guys remember, it was 50% when we had this look here. I was begging for the market to pull back, and if I could get a pullback, any close below 390, I was looking to do a 50% add in the long term. After this day, everything changed. Powell, this was a mini Black Swan event, so then the game plan became, need to see not only a close below 390, but I need to see this hammer type price bar below 390. Then instead of 50%, we'll do a 25% add waiting for a Fed pivot. Well, of course, that didn't happen. The SPY got close. It got very, 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 very close, closing at 390.76. But that elusive 390 close continues to just be a figment of my imagination. So I still am looking to purchase size in the long-term portfolio accounts with the close below 390. That being said, this past week, I went ahead and got a little bit active. I've added 3 positions, 3 stocks to my most aggressive long-term portfolio, thinking that because I want 390, I've been around a long time in the market. Whatever I want, the market normally doesn't get. Since I want to close below 390, as we were vacillating here on Monday and Tuesday, I was like, you know what? I bet I don't get that 390 close. That was poignant. That worked out immediately. But luckily, or not luckily, just it doesn't matter because it's 5 to 20 year holdings. I really don't care what the market does at all in the next 5 years when I purchase these stocks. But I purchased 3 of them that I believe in 5 to 20 years are going to be much, 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 much higher. So I went ahead and stepped in. That being said, the long-term game plan remains the same. I need a SPY close below 390 to add back 25% or more to the long-term portfolios across the board. I would love for that to happen, and or I need to see real capitulation via that equity only put call ratio over 1 close. I need to see a VIX over 40, or I need to see a Fed pivot. If none of that happens and we V-ramp back to new highs, I'll let it go. Listen, that's just long-term portfolios. The market will dip again. The next 20% dip, and we'll get in. And just to let you know, once the Fed pivots, once we know for a fact that this is a low, which I still, at least I put my neck out there, guys. I put my neck on the line. I am still bullish. I still think ultimately this is a low. That being said, I would never make any blind, ignorant, gambling bets or assumptions based on that analysis, but based on all of the evidence at hand via price action, market internals, breadth, macro data, things that really matter. Everything tells me there is no way in hell we are ever going to test that 360 support level ever again. The most I keep thinking that we're going to get is 390. Am I open-minded that things somehow maybe could get worse on the inflation front, even though we've got pullbacks in commodities like UNG off the highs, USO off the highs back here? Is it possible? Sure. Probable? No. Open-minded in any and all situations. And I'll be honest with you guys. Yes, we've had a lot of end-of-day swing signals working out great. Day trading accounts, they're at or near all-time highs across the board. Quarterly portfolios, I messed up this week. I got 2 of the best names in the quarterly portfolios. They did 21 EMA reclaims, and guess who missed them? Me. Do you know why I missed them? Because it happened on this day. And this day, the market was still in a very clear downtrend to me. This bounce was not evident. So I did not take the 21 EMA reclaims on two extremely high quality names that I'm extremely bullish on. You guys, members know which two names those are, but I blew it. Luckily, one is pulled back into that level following Friday's session. But on the quarterly end, we're in cash. Long-term portfolio end, I don't care if the market goes to 390, 380, 360, 320, 300, 280, 250. Below 250, we got problems. But I've got game plans for all of that scenarios happening. And if the market keeps going higher, the Fed pivots, long-term portfolios get invested, quarterly portfolios are going to, no matter what, do the 90-day hold come November when we reconstitute. That is going to happen. That will happen on my end. And the end of the day swing signals will get good. All of that being said, guys, since this bounce attempt and even in this last leg, I've been getting signals and I've been making mention that my individual stock charts look great, which helps with that conviction that we won't probably see that low. But I got to be honest, guys, I'm only getting grade B setups. My favorite setups, my grade A setups, they're just not out there. They're not materializing. Members know exactly what my grade A setups look like, exactly what I'm looking for. That's not happening. My other methodology, added on to my own personal methodology, is, of course, the CANSLIM methodology. I've already given you a few leaders because there's only one sector right now that I would consider a leading sector. Energy, utility stocks. You guys know these boys. ENPH, FSLR, SPW. These are my three favorite alternative energy plays. CANSLIM quality, high quality names. SPWR, really? Thanks. ENPH, we've got to pull. FSLR, I need to pull back to the 21 EMA. So besides that energy sector, the only hot sector currently, XLU, you got an inverse head and shoulder with handle pattern forming here. SRE, SO, NEE. I identified all three of these two members before this pop. In fact, didn't I give these to you guys last weekend? I'm pretty sure. I know I did. I think on these video lessons, public video lessons, I gave you guys these stocks, SRE and SO at least. And on that note, the stocks that I've given you in these video lessons as new long positions, they're all working. CEIX produced nearly a 30% gain since giving out this trade idea. ARHS produced immediately following the trade idea a 20% gain. And GRIN is working. This is not correct. So GRIN had a dividend. They paid out a dividend. Telechart does not adjust for those dividends. It's the stupidest thing ever. Every other major platform software that I use adjusts for the dividend. Go to stockcharts.com and you will see we're slightly green on this position. It's working. I have another long idea that I'll produce at the end of the video lesson. But the whole point is that even though this market's mixed, we're finding ways to make money. I do not care if the market goes higher from here or goes lower from here. I adjust and move accordingly. The number one rule of big wave trading has been, always will be, forever and always cut your losses short. On social media, I post my top holdings that are making new highs when I have the time. What do I not post? All my losers. Why? Because we always cut our losers no matter what. And we always have the same dollar amount at risk no matter what. You should always lose the same dollar amount that you are 100% okay risking from entry to your stop level. You should never size up or size down unless the market calls for that. And right now, the market isn't calling for that. I don't have the CANSLIM quality setups outside of the utility and energy, alternative energy space if we're using the hardcore CANSLIM rules, and I don't have any grade A setups, so I have grade B setups. Now, the market rolls over, those grade B setups, they'll stop either showing up and or they'll keep showing up, which will tell me this low is probably good and that the market's going to rally higher again, or they will fail. I'll take small losses on my small positions. Why are they small? Once again, they are grade B setups, not grade A. So, extremely long intro, But it's all necessary because I cannot believe the amount of traders out there that I see on social media that are either bearish and think the world is going to end again. I'm only I'm very, very old. I am 43 years old. I have heard and seen the world end now, I think, in my only 40 years of living, at least 100 times, including a personal experience of mine growing up in an insane cultish-like background where I came from, where everyone that I was immediately around was 100% sure 2000 was going to usher in the end of the world. It never ends, guys, but let me tell you something. The end of the world only happens once. Betting on that event happening is never a good thing. There's been only 4 extinction periods in modern history since the dawn of time, or for Earth, for planet Earth. I wouldn't bet on it happening again. At the same token, anyone that's bullish and thinks that we're just going to run to new highs in the middle of QT and the Fed still hiking is insane. Could it happen? Yes. I am more in the belief that we could hit new all-time highs before we hit new lows. So, in my mind, the crazier assumption is to think that the market's going to break to new lows and hit new lows. And the least insane assumption is a V ramp to new all-time highs. I believe more new all-time highs could easily come before new lows. But you're about to see why I think we're just going to stay super choppy. So first things first, all of these are secondary indicators. All I care about is price and volume. I've said this every time we make a video lesson. I know you guys see a lot of lines and a lot of indicators, but trust me, they're tertiary, quaternary for me. Primary is always price and volume, but moving averages follow, support resistance levels follow, and then indicators follow. So we're just going to do the SPY, but this can go for anything. For the SPY, is the chicken money flow bullish? No. Is moving average convergence divergence bullish? No. Is TSV bullish on the daily? No. But do we have a slingshot in the TTM trend momentum? Yes. So this should indicate for now a bearish bounce, and we should expect it to fail at resistance levels. When I look at the bigger term time frame, weekly, are we bearish on the CMF? Yes. Are we bearish on the TSV? Yes. Are we slightly bullish but still on the MACD? Yes, but we're underneath the 0 line. So nothing screams super bullish on the weekly or daily time frame of the SPY when we look at the internal indicators. Now, showing how odd it is right now and proving that we're going to probably stay choppy, the RSI indicator, not shown on this chart on the SPY, is back above the 50 level, the midline after Friday's session. Yay! So that's super, super short-term bullish. But RSI is a slower momentum indicator than the faster indicator, the stochastics. And what's so odd is that the full stochastics, even though it's faster, it's below the 50 line. The slower RSI, 14-period RSI, is above the 50 line. Mixed messages. The ADX, not shown on this chart, is crossing. The green line is crossing above the red line. The accumulation distribution line, not shown on this chart, is also near highs. The MACD and PPO, the MACD is on this chart, and PPO is curling underneath the 0 line, but they have not crossed above their moving averages. So, a lot of mixed messages on the indicator front. Now, let's start having fun. Let's start drawing key levels. So this is a major trend line connecting this high to this high, and it's pretty damn close to this 200 SMA in this recent high. So these are all relevant to me. Now, let's do VWAP at important high levels. We're below the VWAP level from the December highs. Got to get this on repeat. VWAP level from the March, April highs. We're barely below that level. Then this recent high, we're still below that level. So you will see these are all potential resistance areas. We are above the 50, 100, 21 EMA, 50, 100 SMA, but we still have the 200 SMA above. So all of this will act as resistance. Let's start getting more nuts. Now, let's use critical resistance levels. This recent high at Jackson Hole before the reversal, this high right here, this high right there, and this high up here. So these are all going to be critical resistance levels along with the moving averages and these anchored VWAPs. So those are the most recent resistance levels. So we could use this line here, but it's been cleared on the upside, so I don't want to use it right now. I just want to use levels not reclaimed or broken yet. This recent high, this recent high, this recent high, and this recent high. And hell, we can even put one right there, which happens to line up. I think I already did, actually. So that line's already there. So these are all resistance levels along with the anchored VWAPs and the moving averages. Now, let's start drawing support levels. Recent low. Yeah, it's not going to be perfect. Sorry, guys. Recent low. Recent low. All of these levels should act as support levels. Now let's use anchored VWAP to this low. Let's use anchored VWAP to this low. And use anchored VWAP to this low. So we can see support levels all throughout here. Then I see an uptrend line connecting this low through the late July low to this recent August low. So here's another support level. Told you we're going to get nuts, guys. And then, of course, one of my favorite tools, Fibonacci retracement tool, from this high to this low. Fibonacci retracement tool from this low to this high. And now here are all of your critical resistance and support levels. Think about what I said about RSI, stochastics. Look at this chart, and I'm going to say it one more time. If you're bullish and think all-time highs are in the cards without any kind of ebb and flow, push and pull, you're being a bit irrational. And if you think we're just going to roll over and go to new lows without hitting any of these important inflection levels, also, you're being a bit irrational. So, I expect a ton of chop moving forward in the overall market. Ultimately, I think the worst is behind us via the inflation front. The Fed has to hike rates. The Fed's projected interest rate hikes that they've been forecasting to the market, they keep telling us in between 3.54, 3.54, 3.54. The CME website says that the Fed rates will be 3.5 to 4 in February. The Fed's rhetoric is in line with CME Watch. Normally, when the Fed's numbers is out of alignment to where the CME futures market expects the interest rates to go, you see dislocation. Moves lower or moves higher. When they're lined up, the market is pretty much at equilibrium. And this is what we should expect that we're going to deal with before there's any real directional trend. Now, with that being said, I do have a trade idea for you on Monday. Let's get to it. And so far, we're 3 for 3 for weekend long ideas. Let's see if we can't make it 4 for 4. So this one, ADT, is a little bit different. GRIN, higher priced. CEIX, higher price. ARH was lower priced, but remember, it was liquid. Earnings winner, beating on the top and bottom line, and it worked out. ADT is in that same boat. Lower priced, but highly liquid stock, very liquid. It's on the New York Stock Exchange. Everybody's familiar with ADT. It beat on the top and bottom line, and they've raised earnings guidance. That's the trifecta on the earnings side. We got the bullish gap. And now what I see here on ADT, which, by the way, CANSLIM quality, I would consider this the only stock under $10 in the market that I would consider on my high-quality CANSLIM watch list. Stocks like that we reviewed, ENPH, SPWR, FSLR, SRE, SO, NE. Look at the prices of all those, okay, guys? Now look at ADT, $8 stock. So ADT beat on top and bottom, raised guidance. It's pulled back. I now have a hammer candle over candle on above average volume. Slingshots in effect. TTM trend momentum has just gone positive. MACD has gone positive. Chaikin money flow is positive on the daily. On the weekly, Chaikin money flow is positive. MACD is positive. TSV is positive. We've came out of a tight, medium, loose squeeze, trending higher. So we're lined up there. What I see here on ADT is a mini triangle being formed. Mini short-term triangle being formed. Now, if you take this trade using my parameters, it's possible you'll get stopped out. I am handling this trade due to the overall market condition, the way that I'm handling it due to the overall market condition. In a raging bull market like 2013, 2003, 2017, late 2020, where prices above all the moving averages are stacked properly. We have everything working out right, big winners in our coffers, grade A setups, great setups in CANSLIM names. That's one thing. If that's the case for this stock ADT, I probably would get long with a break above this flag, and at least on the final piece of the position, give it to this 250 SMA, simple moving averages, or at the very least, this 21 EMA, because it's going to rise up, and I would give it at least to there. Now, it's possible that by the time, if this stock fails, the low of this gap up day, the 21 EMA will be lined up, so that will make sense. But for this trade, the gap up low a day, 791 minus 1 cent, 790 will be my final stop. You can trade on an end-of-day basis if you want to, or you could put your final stop at 791. This is exactly how I'm going to be trading ADT come Monday or this week. The high on Friday is 844. I'm going to enter a good to cancel buy stop order at 845, and my limit order will also be 845. Zero offset. In a hot market, I'll give it 1% porosity to the upside as an offset. In a semi-strong market where I'm confident on the direction that the market wants to go, I'll round up. So if I want to get long at 845, I'll be willing to pay up to 850 for it. In a strong market, I give this stock room to the 21 EMA or the 250 SMA. In this market, it's just this low here. Now, if the stock doesn't gap up on Monday, and if it opens below 839, you can get long at the market and calculate your risk to your risk level at 790. So if you got long at the market, let's say at 834 and your stop is at 790, you take 834 minus 790, get that total, and then whatever your dollar amount is that you're okay risking, let's say it's $1,000, you take that $1,000, divide it into that total, that number that you just got, and that's your share size. And then if the stock happens to trigger and fail immediately, which rarely ever happens, but in case it happens, because anything can happen in the market, you're stopped out losing only exactly what you're okay with losing. So that's how you do with ADT. So my game plan is to get it on the upside. If it works, we trim and trail. We raise our profit stops up, split them up, raise them up. We get any big extension move. What's an extension move? CEIX, I get long. On this day, we break out to new highs. This is an extension move. This is an extension move, taking profits. This is an extension move, taking profits. Not really an extension move, but here, once you're breaking out to new highs and then coming back, taking more profits. Just in this market. Now, in a strong market, I might just keep holding. And I might not do any kind of selling until I get it closed below the 21 EMA. It's just not that kind of market. All right, everyone. I'll just go ahead and wrap it up there. A little bit longer of a video lesson than I wanted, but hey, that's okay. Anyways, I love you guys. You guys know what to do. Show me some love or don't at this point. I can't force you guys to do anything, but just to let you know, I appreciate you guys at least watching these video lessons. If you want to join the fam, the crew, become a member, extremely low price, nominal cost to get the long-term portfolios, the quarterly portfolios, all of my end-of-day swing trades and all of my intraday trades, which, by the way, my educational toss account with break-even stops, my long-only, small-cap-only, day trade-only educational toss account with break-even stops that we end officially on October 6th, meaning that we then trade it normal after October 6th. 39 straight wins. I beat my previous record of 38 straight wins, which I thought was just, that'll never be beaten. I just beat it. 39 straight wins in a row. Pretty awesome. Join the team if you want. If not, I'll have another video lesson for you next weekend. Aloha.